Hello, everyone. The purpose of this video is to talk briefly about Nike's 401k plan because there's been a very significant change this month, and all employees will have to make a key decision. So this is to help guide you through that decision. It's about 10 minutes. Of course, Nike has 75,000 employees now. The market value of its stock is over 200 billion, and the stock has gone from 35 to 135 in the last 5 years. Enormously successful. Currently, there's 4.6 billion in Nike's 401k plan. The overall allocation is 80% stock and stock funds to 20% fixed income. Nike stock generally represents about 20% of the plan assets. And the return, excluding Nike stock, is about 9.6% in the last year, ending May 2020. However, the gaps over the last 5 years, excluding Nike stock, are 2.7, 2.3, 7, add them up, about 17%. So it's a really good decision for HR to take a fresh look at this plan and maybe think of a new alternative. This information is based on SEC filings. One thing that's particularly interesting to me about Nike's plan is the employer, Nike, actually contributes more to the plan than the employees, even though the employees contribute aggressively also. A sign of great management. So the key decision that all employees are going to have to make is whether to choose Brokerage Link or BlackRock. Okay. Currently, only 2.2% of the entire plan assets are in the Brokerage Link, which is essentially like having an open platform. From Brokerage Link, you can choose Vanguard funds, Fidelity funds, whatever you want. It's open. Of course, the reason people don't choose that is, first of all, they're not communicated much about that choice because there's a lot of money being made putting in the standard choices. Okay. But that's Brokerage Link. It's an open platform. The second option is BlackRock. And BlackRock is going to do everything for you. You've seen the video, the plane flying across through the dark clouds, coasting down to retirement. The communication piece is so brilliant. I mean, it's like material for a preschooler. Its simplicity is so ingenious. Okay, and the concept of the BlackRock allocations is brilliant. However, there's a serious problem with BlackRock. Okay, when you take a look at BlackRock, they're offering 4 choices: a fixed income fund, and 3 equity choices. You could basically say S&P 500 index, an extended market index, and an international fund. That's it. 4 funds. That's all they're offering. Now, BlackRock's publicly traded. They've got shareholders and dividends to take care of, whereas Vanguard's a co-op. So from the Brokerage Link choice, the open platform, you could do the exact same thing using Vanguard funds. Rather than one fixed income fund, which is high risk because interest rates are low right now, you could choose a short, intermediate, and long-term Vanguard fixed income fund. And if you want an S&P 500 index, it's there for you. You want extended market index, it's there. You want the international fund, it's there also. And you're going to get a dramatic reduction in fees over the long haul by choosing Vanguard. Now, some will say, oh, that's impossible. The fees are so low with BlackRock. Nonsense. Those are not the fees, okay? If there's any lesson from Robinhood and the GameStop phenomena and all this, it's that a lot of fees are buried. So everyone thought they were getting free trades with Robinhood. Then they discovered Robinhood was making $250 million a quarter from hedge funds buying the information about what everyone's going to be trading. Okay, so the point is this, and who do you think, coincidentally, are the 2 largest shareholders in GameStop, each owning 13% of the entire company? This is the company that's soared and plunged, and short sellers making a fortune, and just a speculative frenzy. Who are the 2 largest shareholders? Fidelity and BlackRock. They each own 13% of GameStop. So they have so many relationships, so many deep relationships, and there's so many massive fees passing back and forth. It's ridiculous. Now, 2 things about this that you'll see in the fine print also regarding BlackRock is BlackRock allows for speculations, derivatives, call options, all these various things to be in their funds. In fact, they're the ones that lobbied the SEC to allow that in ETFs, which was just kind of unthinkable for retirement funds, but they were successful. The other thing is BlackRock is heavy into securities lending. It says right there in the fine print, they may do securities lending. What that basically means is all this portfolio of stocks, say $2 billion worth of stocks, they're going to lend these to hedge funds and private investors so they can do their speculations, because legally they have to have some kind of ownership thing. Securities lending, I did a blog post on it. You can go to my blog, just type in securities lending. There's a little description. It's so ridiculous. It's like, say I'm Oregon Public PERS, I'd lend my $10 billion of securities, lend them as if 2 people could own them at the same time to these speculators so they can do their hedge funds legally. So, or their short sales and all this stuff legally. Just the tip of the iceberg for BlackRock. Okay, BlackRock, of course, is big in China. Larry Fink's son is involved with a Chinese investment company, probably why they got the first license to do this kind of stuff in China. And they're shifting staggering amounts to China via these index funds that are based exclusively on, say, the MSCI index, in which the largest holdings are Alibaba, Tencent, these huge Chinese companies that don't have any oversight over their accounting practices. And I mean, they're going to have their dot-com moment for sure. There's no question. And what it's going to be is bartered transactions because the government is controlling way too much of the economy over there. Things that aren't real sales. The cash never transpired. Point is this. BlackRock, they got into this institutional investing via their purchase of iShares when Barclays had trouble in 2009. And they're just not a suitable choice. It looks great on paper. And again, I think HR did a terrific job of structuring the thing. And if someone wants to choose BlackRock, best of luck, okay? But the beautiful thing about the plan is there's the brokerage link choice there. So you can set up the exact same structure choosing Vanguard funds. And that's what you want to do. And my estimate is that in retirement, 15 years from now, you'll have a third more assets just from that structural advantage. And you see firms like BlackRock toss out these concepts of index this and index that. Well, hey, these are very loose terms. They show their fee structure here. What's Fidelity making from BlackRock, and what's going back and forth in terms of all their other fixed income products and other things that. And again, what you're doing as a Nike employee, you're providing $2 billion worth of stocks for BlackRock to do securities lending on, which I'm pretty sure Vanguard doesn't do. So my point is, from just like a corporate responsibility standpoint, you want to do the right thing, Nike's big on that, doing the right thing. Choose Vanguard. It's a co-op, again, with no shareholders, whereas BlackRock's got shareholders to give dividends and capital appreciation too. So again, that's just the tip of the iceberg. And again, the big speculators in this Robinhood phenomenon, everyone thought it was the Robinhood investors, democratization of investment versus the hedge funds. But there are other players involved. I mean, we all know that in China, for instance, information's a different thing. I mean, the previous guy was going to be Premier Bo Xinlai, provincial head. He would hack into the premier's cell phone when he came to visit. It'd be like the governor of Oregon hacking into Biden or Trump's cell phones. I mean, it's so crazy. And do you really want to believe that they're not hacking into law firms? They're not hacking into executives at your firm's phones, data systems, all that stuff, and doing aggressive speculations? I mean, it's naive to think they're not doing that. Of course they're doing it. And that's why hedge funds in China have returned 10 times as much as hedge funds here in the West in the last 6 months. And Bloomberg, Wall Street Journal both reported this. Staggering returns. Well, imagine what you could do if you had that kind of information. And of course, these hacking tools are everywhere. They're using products like NSO's Pegasus product, which was the product apparently that was used to track Khashoggi. And everyone talks about this being just for law enforcement and sovereign governments, but they never talk about, well, like in China, what's a sovereign government? I mean, all these companies are related to the government. Of course, they're using all these cyber tools. And Wall Street Journal reported they shut down the power grid in India, most likely due to a border skirmish, and 20,000 people in Mumbai didn't have power. But the point is that information is power, and BlackRock's got a lot of power right now, way too much, and that's generally self-destructive in the end. And so you look at the power they have over your retirement is not a healthy thing. Only offering 4 choices, 1 fixed income choice, a long term. Again, that's reckless, because if you're close to retirement, you don't want a big drop in your retirement assets because you're in the wrong fixed income fund. That was the lesson a lot of people learned in 2009. How could a bond fund go down 40%? So my point is, again, you got a great plan, but there's a key decision you got to make. And it's a tough decision probably because only 2.2% of the assets are currently in brokerage. And you might think, oh, that's a little messy. I don't really want to choose that. Choose it. And do the Vanguard funds. Just a similar structure to what Barclays has. And spend 10 minutes a year and update it based on your age. And enjoy 30% more assets in retirement. Now, some of you might think I'm a little hard on BlackRock, but BlackRock can take care of themselves. They're the biggest asset manager in the world. Okay? Take a look at this letter from Senator McSally in Arizona. This was after I did a study, and some media organizations talked about it a little bit, about the MSCI index, how 5% of it was Chinese companies 3 years ago, and now it's over 50%. And the staggering amount of retirement assets that are going to China to companies like Alibaba and Tencent. They're loosely regulated. Again, nothing wrong with investing in Chinese companies, but this scheme led by BlackRock is just ridiculous. And by the way, BlackRock is one of the 3 largest shareholders of this firm MSCI that creates the index. And if you look at it again from a governance standpoint, I'm a big believer in good corporate governance. I say, what does that mean? I say, well, look at a company like Nokia. Nokia has terrific governance, and it should have a real promising future. But it's interesting that Nokia stock is about $4 a share now, and its main rival Ericsson, the CEO, sits on the board of Alibaba, and Ericsson's got some nice, big, cozy new contracts in China, and Nokia is backing up a little bit on China and getting a lot of pressure in other ways. I mean, just again, imagine if you had all this information, how easy you could manipulate a company's fortunes. Okay, and you might think, what does that mean? I'd say, well, um, information is power, but you really have to look at the quality of the information. And you might say, well, what gives me some kind of insight into evaluating your 401k plan? Well, let's take a look at a little history. 2 visuals, or 3 actually. Here's one for a keynote speech I gave at Kent State 20 years ago. The guy standing next to me, the shorter guy, Robert Herdman, Chief Operating Officer of the SEC, and he was a senior partner at Ernst & Young. Interestingly, Ernst & Young is the consultant that you're using to advise you on all this stuff. Now, it used to be the big 8 accounting firms. Now there's the final 4. Now, some might think that's a dramatic conflict of interest. They may be doing a great job, but again, one of the lessons of Enron, by Arthur Andersen, is that accounting firms need to stick to their knitting, as they used to say. And the notion of getting heavily into investments when they're auditing a lot of these very same companies, it's interesting. So here are a few other quick references. Here's a story I did for Barron's on Microsoft, 1,200 words. Before this ran, they issued a press release on Reuters and AP saying a big story was coming. It was all about stock options and the whole thing back in the day there. And then here's one, Tale of Two Cities. Sandy Weil, the CEO, told one tale, I told the other tale. Here's a piece in Bloomberg on large IRAs, LA Times on the largest hedge fund in the country, Renaissance Technologies. Here's a picture, a clip from The Guardian. I've done several reviews for them. This one was on offshore accounts. So my point is that I've been following these retirement plans for 20 years. I understand them. And what I would say quite sincerely to every employee at Nike, choose the brokerage link and you'll do much better in retirement. Thanks for watching. And if someone from management wants me to help them put together a couple simple model portfolios like the BlackRock one, using brokerage link, using Vanguard, or maybe even Fidelity's subfamily of funds, the Spartan subfamily, be glad to do it. Just reach out, send me a note. Thank you.